Good evening, everybody. Hope everybody's having a nice evening. I think we just had our first day of real fall here in just north of Pittsburgh. All right, got the great pleasure of having Ron back with us. You can see his bio that I put in there. Like to have Ron in here because he's been trading for over 15 years. He's been teaching people how to trade successfully, and he's got one very simple concept, and that is he keeps everything simple and very logical. So with that, Ron, welcome again to the Candlestick Forum. We're anxious to see your information tonight.
Hey, Steve, thanks so much. It is very nice to be here. I appreciate you inviting me in. Hey, everybody. I'm hoping you guys can see my screen. If you can, and my volume's coming through okay, if you can just give me a couple yeses, and then we're going to go ahead and kick off here. All right, great. All right, so I'm going to send, excuse me, I'm going to send you guys a poll, and we're just going to have a little fun with it. There's no right or wrong answer. I would just really love to know if, what do you guys like to trade? Are you guys just day traders, for instance? And you can choose more than one. Do you swing trade? Meaning you hold stocks and options maybe for a couple days or a couple weeks, or hey, maybe it's one of those IRA type portfolios that I call them, where you buy it today and you may not sell that sucker for 6 or 12 months. Maybe you're just an options trader, which is awesome. Or maybe you only trade stocks and that's it. I would just like to have a little bit of an idea of who I'm speaking to, because I can craft this presentation today, which is going to be interactive, and speak to the most folks out there. So right now it's a bit of a landslide. Number 2 is winning, where probably close to 60% of you are selecting that one. About 25% are selecting stocks only, and then it's divvied up between day trading. So that's pretty cool. I'm going to be talking to probably about 80 to 85% of the folks here, meaning you at least trade stock. Actually, it's going to be like 90%, where you at least trade options, stock, or you swing trade. So pretty cool. I'm just going to close the poll. Just wanted to have some fun with that. My name is Ron Haydt. I am the president of Financial. This is a very cool software that we built. And Steve was so kind enough to invite us in months ago, where we did an initial beta test with you guys, and we asked you for feedback. And boy, oh boy, do you guys give it, which is one of the reasons we were chatting about who to try and work with. Steve was at the top of the list because we wanted active feedback. And since then, we've incorporated a tremendous amount of what you guys wanted into the software that we already built. There was just so much more that everybody wanted to take a peek at. So that's what we're going to do today. We're going to be using end of day data. We're going to talk about how we could potentially trade with it. And I'm going to take some of your examples as well. Now, if you ever find me in a presentation, you will always see a disclaimer. And I have to say it out loud that nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. All right, so cool beans. So all we're going to do is go to financial.com, and it's sort of a cool name, FINANCHILL, Financial. If you find yourself at the initial page, it sort of looks like Google, and it's designed that way on purpose, just for ease of use. Meaning we can start by just typing in a stock symbol. Let's go ahead and type in the S&P 500 ETF, and then boom, it populates. Now there's a lot, and I'm not going to be able to cover them all here today, but there's a tremendous amount of benefits, features that are in here that we can use. I'm going to pick apart a couple of the big ones that I think will have the biggest impact for you. So one thing that it defaults to immediately is stock score. And I get the question, what does that mean? If you ever see a question mark, you just move your mouse over it, it's going to pop up. And the stock score is a tool for investors which ranks stocks using a proprietary algorithm to provide buy and sell ratings. Stock scores are updated daily. This is, and I'm going to date myself with this one, but this is not supposed to be a light bright board. It's not supposed to look like Thinkorswim or TradeStation, and all of a sudden there's green and red lights flashing all over. This is supposed to allow you to focus. So it's going to be end of day data, okay? Right now, the Spiders has a score of 70. What does that even mean? It goes from basically 1 to 100. 100 is the highest score, and 1 is going to be the lowest. However, it does not mean that a score with 70 is only going to be 70% of the best it can be. The stock score is going to be based against itself, if you will. And if we scroll down, we'll start to see some of that. The score for Spiders is 70, which is 34% above its average mean score of 50. Okay. It's currently trading in the 60 to 70 percentile of its range. The score is currently showing a higher than normal reading, suggesting that risk levels may be somewhat lower than normal. Okay. Now that I know that, it's not giving me, hey, the score is so high that I should be somewhat cautious from a historical perspective, but it's also not so low where it's basically going to go into a sell signal. Another pretty cool way of doing it is just looking at the histogram. Hey, red is sell and green is buy. And it went on a sell for literally a day and went right back on a buy. This is not for the day trader. In fact, this isn't really even for swing trading. What this is for is, quote, the set it and forget it mentality, where it could be held for weeks or months. So when I see a stock, in this case, the Spiders with a green, I'm like, okay, it's on a buy. If I'm thinking about covered calls, I could do that as an example. Again, I can't tell you what to do. I am not your licensed financial advisor, and I won't tell you what to do. The decision always has to be yours in the end. But what I'm saying is, if I see green, I'm not necessarily thinking about downside protection unless earnings is coming. I can feel somewhat comfortable that it seems like the stock is probably going higher. And if it's in a range, like I said, I'll do covered calls. Now, I just want to pause here for a second. A few folks are saying they're hearing some echoes. I've used Omnovia and Webinato a tremendous amount of times. I use it all the time myself. There is only one browser open for me. Am I echoing, or is it just for a few folks? Can you guys just let me know if my sound is okay? Just put okay or good. If it's bad, you can put bad. Just want to make sure that this is not a problem that is getting worse. Oh, okay, great. I am good. Thank you. So just FYI, if you guys have any audio or visual issues and it persists for more than about 10 or 15 seconds, you can log out and get back in. Just use the same link that Steve has given you. Yeah, my voice is a little soft. Just trying to make sure I don't shout or yell. I get that a lot. I'm so sorry. All right, so that is stock score. Really straightforward. I personally don't think I need to spend any more time on it with you guys. If I wanted to type in another stock like Caterpillar, Cat's been up huge with the election. We can see Caterpillar had a bunch of buys and sells in here, and then ever since July, it's been green. If we scroll down, we're going to get additional data points. We could type in another ETF. Let's type in the SMH, which is the semiconductor ETF. Now, it's still at 74. It's still on a buy. But today's data is not up here yet. You see this? It's going to be loading up any minute. This is going to come and show November 10th. So as you look at this in the evening, it's going to be updated. And when we get this big red candle today, if you guys haven't noticed, the SMH and the Qs were down today. Big divergence. The SMH lost 1.86%, even higher volume than yesterday. This one might be getting closer to start shifting in towards maybe a sell, or it might start showing that risk is a little higher than normal. We could come in here, we could look at, let's look at oil. We could type in USO. USO's on a sell. Look how long it's been on a sell. So if I was thinking about adding USO, I could at least wait for a green and then it went red. It went green for a day and then red. So is it going to catch every single move? No, nothing's ever going to do that. But it's actually been pretty gosh darn accurate, all things considered, that this is not something I necessarily want to be long in for a long-term hold right now. Or if I do have it and it's showing me a sell, gosh, I sure hope I'm using some covered calls to try to put some money in my pocket, either weekly or monthly, to help lower my cost basis. All right. Now, as I go through this, if you guys think of questions as we going through right now, or maybe you think of some later, write them down or type them in and we'll go ahead and address them. But given that today's actually November 10th, we are in a seasonally positive period of time. Now, we did have the election. That's a fundamental event. And then most got it wrong. They were almost giving it no chance. I don't want to get into the specifics and all that good stuff, but it seemed to be a surprise. So that makes things really interesting. We went from actually pulling back in the markets, which was setting up for potentially an amazing possible fourth quarter situation, where now we've had a big move up. And what's really cool is if we have stocks that are on the verge of breaking out or starting to break out, or maybe they're just in your watch list and you're trying to figure out which one to trade. Because if I were to ask you right now, what's one of your biggest problems in trading? You'd probably say, making money every day, right? I think we could all say that as traders sometimes. But sometimes you're going to have 3, 4, 5 stocks, right, that you're trying to figure out what to trade. What I'm going to show you now is something that I use to whittle that field down and be laser focused. Because when I was chatting with Steve about this, months ago, one of the things that he had mentioned was, if you use candlestick patterns, which you guys love and I love, and you say, wait a minute, I have, and I'm going to make this part up, bullish engulfing on stocks A, B, and C. They all look good. But we only have so much money. We're not the Fed. We can't print our own money and have unlimited capital. How are we going to know which one of those 3 to pick, right? Well, this is what's going to be awesome. So we're going to start by going to search. We're going to click on seasonality. Now, I could actually type in a stock, and I happen to know one that does perform well right now. But we could actually go in and type in every single stock that's in our stock watch list and see how it performs. Now, I had USO in, which is the oil ETF. Check this out. This one actually has a negative bias going all the way in for the next 13 weeks. Over the next 13 weeks, USO, on average, historically has fallen 13% based on 10 years. It's fallen lower by 13% in 7 of those 10 years. That is not good. That means there's a 70% chance this thing is going to drop by this amount. That's based on its history. It cannot tell us how much it's going to drop this year or if it's going to drop this year. No one has a crystal ball. But gosh darn it, this is pretty dang close. We're using the stock's own history to decide. Now, when I travel around or I'm, in sessions with folks or next week at the Traders Expo, chatting with people, some folks think, seasonality. Isn't that like a little bit of voodoo? Isn't that a little funny? And, the first time I heard about it, I was like, really? The stock market is seasonal? Are you kidding me? If it's that easy, everybody would do it. And I said that. But here's the thing. You and I here today, even if we tried to pool all our money, it's unlikely we're going to be able to make that stock move for more than a few seconds, if we could even pull that off. Certainly it's unlikely for a couple days. But the big funds out there, when they start committing capital or selling, in this case of USO, they're not buying it, they're dumping it. They can't get in and get out today, get in today and get out on Tuesday. There's not enough room for them because they have to build their position over days or weeks, ride it for that double-digit gain, and then try to get out before they push the stock back down. So one thing that you and I have a huge advantage as being a retail investor, we can jump in today and buy 1,000 of this or 1 of this and go sell it tomorrow afternoon, and we don't move the market. Huge difference. Watch what happens when I type in the spiders. And I'm going to go out actually about 16 weeks on purpose. Over the next 16 weeks, the S&P 500 500 stocks, gang, rises by 3.2% based on 23 years of stock performance. This is huge because we start going back 23 years. Now we're accounting for 08, 09, 2000. Get the idea? It has a 73% hit rate. Maybe you've heard of this. The markets typically outperform to the upside. November to May, and then May to November, they typically don't perform as well. We're in that window now, and now the election is behind us. We can actually see where there's a big move up right around Thanksgiving, right into the middle of December. Then it actually pulls back about 1 full percent, give or take, and then it goes right back up into the beginning of January until it sort of has a belly effect at the end of January. Well, this is huge. There's 500 companies that produce this result. So if I were to type in a stock like Apple, Apple actually sort of is weak into Thanksgiving. It rises after Thanksgiving. Then it has that dip like the S&P, and then at the end of the year, it just goes bonkers right into the January earnings report and maybe the next conference. This is starting to become super valuable information. So when I see a stock that's going to underperform for the next 2 weeks, which by the way Apple is right now, if you don't know what Apple's been doing, I'll show you. And there we go, after earnings, for whatever reason, trends down. I'm thinking covered calls. This can actually help me be laser focused on trying to earn income or try to put a little protection in my pocket. And then when I start getting to the end of December, I know that this stock goes from basically flat on average to up 5% in the matter of week ending 12/21 to 1/18. Now we had to assign a time period to this. So if you look at it at a calendar, you might say, wait, 12/21 is like a Wednesday. It's a rolling year. There's still a 7-day period. It's not going to be always what you think as a week because every year the 12th is going to be on a different day. You sort of get the idea, right? Hugely powerful. How about a stock like Coach coming into the holidays? Over the next 13 weeks, this thing goes up 75% of the time, 8% on average. Look what happens. It goes up right into the middle of December, and then it does nothing, and then it starts to go back up. Somebody typed in Bank of America. How does B of A do this time of year? Now, the election has Bank of America, Government Sachs, a few of these other big boys. They're all ripping through the roof right now. But if you take out the election, for instance, look what B of A does. You can sort of see it's going nowhere. So if and this was for OS, if I scroll down here, check this out. B of A has risen higher by an average of 2.4% in 19 of 30 years. That's it. And that only does that 63% of the time. I'm looking for something that's going to be pretty much 70% or more, 75% or more. I want a 3/4%, 3 out of 4 chance that this thing will trend higher. Okay, let's talk retailers. Well, actually, we'll do AMD for Peter. We're doing great on time. So Peter typed in AMD, Advanced Micro. Peter, by the way, this was one of the first stocks I ever traded. Over the next 13 weeks, and I'm saying 13 weeks because that puts us into the middle of January. That is the default setting. We can go up here and move this slider however we want. What's its hit rate? It's going to be 65% accurate, Peter, over the next 13 weeks to the upside, and it goes up about 13% in 21 of 32 years. So Peter, AMD actually has some serious upside potential in terms of percentages. But the catch, Peter, is it's only right 65% of the time. So Peter, if you were to ask me and you gave me AMD as one of the potential ones to trade, this is where applying what we do at Financial to what Steve does as an example. Because Steve might be coming in here and saying, okay, let's bring in AMD. Let's look at a chart. Do we have any bullish engulfing? Do we have any frying pan bottoms? Do we have a reversal gap? Is there any good volume? Whatever Steve might be looking for as an example. And I would say to you, oh gosh, Peter, AMD down 9% today. It is not above moving averages. It's probably certainly not above the cloud if you like using Ichimoku. It's just not one I'd be interested in, Peter, for something that I'd want to buy tomorrow. Does that make sense, Peter? So even though it does have a nice track record right now, I absolutely have nothing technically to help me buy AMD right now. All right, so let me go back here. Gary wants to see what the stock score currently is on AMD. AMD right now is a buy, but please remember, Gary, it's going to update tonight. Look what the date is. This does not have today's prices in. With tonight's move, it's very possible it's going to go to a sell. Okay? You're welcome. I will try to answer as much as you guys type in as I can. It might get a little crazy at some point. Using the seasonality feature, I'm going to look at Visa and MasterCard, and then we're going to do some screening, which I think you guys will find incredibly helpful. And Jennifer, we can do NVIDIA as well. So here is Visa, everywhere you don't want to be. So Visa's flat historically. It actually takes a dip even into Black Friday. Now, just FYI, if you don't know, my background is I never thought I'd even be in the stock market. I'm not going to give you the whole story and bore you to death, but I spent 20 years in retail doing business against the Macy's, the Lowe's, the Home Depot, the Walmarts, and we kicked their butts. We were a chain store. We were big enough to buy mass quantities, but yet small enough to be a pain in their behind. So when it comes to retail stocks in the holiday season, I like to think that I have a great feel for it, if you will. Not always right, of course, but I certainly know what's going on with certain retailers if I'm going to trade them. And you would think Visa, if it's a credit card company and it's coming into the holidays, they probably do well. And that would be a reasonable thought, right? If there's lots of transactions, hey, they should do well. But look what happens historically. Visa actually goes down into Black Friday, and then only once we get to the beginning of December does it start to trend higher. So if I scroll down here over the next 13 weeks, Visa, now it only has 8 years of trading history, so we have to be very, very careful, Paul, on Visa. We're not going back more than one, quote, crash, if you will. The more data that I can get, the more comfortable I can feel with the results. And data is everything. 62% of the time, it only goes up 1.6%. I wouldn't touch this thing with a 10-foot pole. I'm just not that interested. It's not good enough for me. That's not enough history. Now, if I come up here and look at MasterCard, it's just as choppy. But here's one thing that I could tell you. While this is never going to guarantee anything, it's telling us what the stock has done in the past. Look what happens when we get into the middle of January. It goes from plus 3.3% to plus 0.4%. It has a 3% drop towards the end of January. So if I'm trading MasterCard or Visa, in this case MasterCard, all right, maybe I'll try to be a little bullish. But once I get to the next year, I'm thinking about covered calls. I might think about collar trades. If they have earnings, I might need to be prepared because something's causing this thing to drop a couple percent. I'm certainly not going to go buy it at that time. I think that would be a terrible time to buy it based on historical prices. Now, MasterCard's been public 10 years. It has a 60% chance of going up based on its history. It only goes up about 1%. Now, what I could do is I could back this off to 10 weeks. Now look what happens. Now I have a 70% hit rate, but it's still only 10, right? Don has a question about Nugget and Dust. Don, the triple long and triple short ETFs just can't be used. Even the doubles can't be used. And it's not that our software isn't adequate. They're designed to go to zero over time. So from a seasonality perspective, it's just not going to give you a true edge. There would have to be extraordinary gains in those specific weeks. So Don, what I would tell you is I would actually come up here and put the one that they're sort of tied to is come up here to GDX and say, okay, we have 10 years. That's not the best. but it does go up about what? It goes up 8% in 5 of the 10 years. That's only a 50% hit rate over 13 weeks. But watch what happens. You guys ready? I'm going to go out to 20 weeks. Now it's starting to get better. Look at the huge change. By the time we get to the end of January, it goes from plus 2% on average, right there, that week, all the way up to plus 12. This thing has a 10% run in about a month and a half. Watch what happens if I type in gold. And this is what we've been telling our members, at Financial. It's like, listen, this is the dead season. November, December, nothing happens with gold until January. And you might say, yeah, whatever. I'm like, oh, really? Yeah, whatever? Okay, well, hold your pants on. We're going to go take a look at gold. We're going to go back 2 years. See where my cursor is? Sort of the bottom of the screen. Look what happened in January. This thing went bonkers. This is the seasonally positive time. Oh, wait. It did that back in 2015, too. What do you know? So is it any shock? Like, if I'm trading gold, there's no way I want to be long right now. Okay, I'm going to put an asterisk behind that because, sure, I might want to be long a stock if it's looking technically fantastic and it has great candlestick patterns. I get it. But there was nothing great about any of this. It was just crawling along the 200-day. Gold went back up. It could not get back above previous support, which is now resistance. And then it rolls over on huge volume. So I'm basically just going to put my gold, my silver, and my miners away. I'm going to wait to the beginning of January because that's when historically these suckers begin to start running, that first week. And I just went back 2 years and just showed you what happens. It's extraordinary. So right now it's dead weight, but you watch what happens come January. And there it goes. So if I am trading gold right now and I can't sell it, meaning, liquidate the position and go flat, I'm thinking about collar trades, married puts, covered calls probably for sure, something to help protect my long positions as an example. All right, lots of questions here. Just going to scroll back. I can't hit everybody. But Jennifer, I want to do NVIDIA. I say it both ways. NVIDIA is one of the strongest trending stocks right now. Over the next 13 weeks, as I scroll down here, the stock goes up 12% based on 17 years of stock performance. But specifically, this is the one. You probably guessed. I just go to the second bullet point. NVIDIA has risen by an average of 12% in 10 of 17 years. So now we're talking about going back to 1999. So we have 2 market crashes in there, right? 10 of 17 years by 58%. Well, that doesn't sound that good, right? Well, that's because it's the default setting. I see a dip the middle of January. Now let me hit this. Ooh, now it goes up 64%. So Jennifer, I'm not at my typically 75% area that I like to be, Jennifer. But when I start seeing double-digit gains, that really does get my attention. Does that make sense? It's like maybe this isn't the best, but boy, oh boy, that's hard to not want to look at. So if I go to a chart here of NVIDIA, man, just look what this thing has done. This thing's just been shot out of a cannon. It's been crazy, crazy bullish. But if I'm thinking about going into buy NVIDIA right now, what are some things that I need to be aware of? Hey, do they have an earnings report coming up? I don't necessarily want to buy it right in front of earnings a day or two before or a week before, because those are fundamental reports that can alter the stock's direction in a heartbeat. B, how is the candlestick pattern looking? Are we above moving averages? Or if you're a cloud trader, are you above the cloud? So here is the 50-day moving average, and look what you see. It's a 50-day SMA. It's been support in May. It's been support here in September, but there's nothing bullish right now. So actually, Jennifer, despite this stock's impressive 13% average gain in the next, 2 months, 3 months, there's nothing for me to do right now. Now, Jennifer's saying, and so is some other folks, that NVIDIA had earnings tonight. Now it's up at 78. Boom. There you go. So it did go higher, but I will tell you right now, that is not the kind of trading that I like, because it easily could have gone down to 58. I like to trade them after earnings or get in before earnings where I can still have a chance to get out before they actually report. I typically don't like to initiate a brand new trade right in front of the report because it's a gambler. It's a crapshoot. That's how I trade. I like money, and I really don't like to lose it unnecessarily. Okay, Peter, you have a question about sorting stocks based on some potential seasonality. We are going to do that next. So I tried to hit as many as I could for these for you. I want to now take you to what I think is one of the most powerful features of the site. Now we can screen for stock score, we can screen for seasonality, and we can also screen for covered call income. Now before we go into seasonality, I just want to show you this so I don't miss it. We've built what we would call the most powerful covered call screener out there. It has the most criteria that we've seen. We've been out there, we've checked around. It's the most elaborate. You guys can come in here and search for covered calls based on strike prices, stock prices, PEs, option price, implied volatility, market cap, cut out all the little fish, get rid of them. Look for minimum returns. Like I said, you can exclude weekly options. We can go in here and look for covered calls in December to help put some holiday cash in our pockets. Make sure all the short calls are at or out of the money. Cut out all the little cheapy stocks. Make sure they're 20 bucks or more. Maybe you don't even want to look at $300 stocks because they're too expensive. Drop it down to like 250, and you're being given a whole list of stocks. Here's something else as the trend finder. You may have heard me in other webinars, and I like to use a very, very simple approach to trading. What I've done is basically taken what's in my head and then just from a technical perspective is given them arrows. I use the 5-day, the 20-day EMA, the 50 and 200 SMA. Depending where the stock is, above or below those moving averages, it gives you an arrow. So if you said, hey, you know, I want to type in my stock or I want to search for my stock, because you can type in a stock and get it. If you have a green arrow, it's generally trending bullish. If you have a red arrow, it's generally trending bearish. And if I scroll down here, we have all these green arrows right now because the market is so bullish. Hopefully now we're into some gray arrows. This means it's probably a little bit of spaghetti. It's above some, it's below some. Well, guess what happens when I see sideways arrows? Instant covered calls. Yellow up arrows. The trend is still bullish, but it's not as bullish as the green arrow. So pretty cool stuff. You can data mine for these covered call opportunities. I forgot to show you guys this last time when Steve invited me in. I quickly wanted to do it now. But hugely interactive. You can include, exclude symbols. I hate drug stocks. I could start typing in drug stocks in here just so they don't appear. And just hit OK, and boom, it'll take them right out. All right. Now, let me show you what I think is incredibly powerful. Screen seasonality. So I was talking about the Traders Expo next week. Let's say we're all out there. We're all having our favorite beverage. We're over at Caesars, just shooting the breeze, talking about stocks, and we're like, it's the holiday season. Markets typically outperform. Up until the recent election, we've had a 2-month trading range, right? Well, we can now look for stocks that are about to break out based on proven historical patterns using their own history. It's brain dead simple. I can look for stocks that are going to rise or fall, depending which way I want to do it. I'm going to go rise because we are seasonally positive. So 5 to 20%. Over how many weeks? Let's make it 8 weeks. What kind of accuracy rate do you want to see? Let's at least make it 70%. How does that sound? Now I can do some advanced filtering. I can cut stocks out less than $5 or $10. And I think this is the next most important thing. The more data that we can get can make it the more accurate, right? It's sort of like baseball. It's like, oh, they say someone is has a 500 batting average. Yeah, they had 2 at-bats. Oh, they have a 500 batting average over 15 years of playing in the pros. Yeah, I'll take that person every day of the week. That's how we can view these stocks. We want the all-stars. We want the MVPs. We want the ones that year in and year out are the most reliable. So I think it is absolutely crucial that we come in here and at least make this 10 years. That takes us back to 2006, so we can at least account for the 08-09 crash. But heck, we could even make it 15 years and go back to 2001. So let's just start at 10 years, 70% hit rate over the next 8 weeks. There's a lot of stocks here. And guess where I go? Boom, just show me the money. All of a sudden, DSGX over the next 8 weeks goes up 40%. Okay, I don't know what that company is, but I think I might want to learn and figure out why do they do this. Was there some kind of just huge gap? Are they a drug stock? We have INCY. Wait a minute. We have Red Hat, Akamai, Autodesk, Express Scripts, ePay, VeriSign, Monsanto, Lennar, the home builder, Computer Sciences, Alexion, Garmin. All of a sudden we have, wow, these are real companies. Very, very interesting. Now, if I start dropping this to 6 weeks, I'm going to get different results. All of a sudden, Amazon's in here. Really? Over the next 6 weeks, Amazon goes up 12%? Very interesting. You'll see Autodesk. And what I like to do is just come down here, and I'll basically do that. I'll start with about a month out, month and a half out. I'll go 6 weeks. I'll go 8 weeks. I'll go 10 weeks. See if anybody changes. Now that one's a little bizarre. I don't know why he's in here unless there's some kind of crazy number, but I'm going to say that might not be right with a 94% win. Rambus is in here. Let's go out to 12 weeks. What do we got now? Alexion is still here. ePay is still here. Cognizant, wow, 14%. And then I can come in here and make this 50 per page. Keep scrolling down. KLAC, KLA 10 core. Okay. So I got a good idea, Monsanto. So here's what I want to do. We're the middle of November. 4 weeks puts us the middle of December. 4 more weeks puts us the middle of January. And if I go back to search seasonality and type in the SPY, come on. Oh gosh, I hope my internet's not going down. There it is. What do we see? There is a dip right when we get into the middle of January. I can actually plan out my forecast, my trading forecast for the next 2 months. I pretty much want to start looking to get into stocks now, and I want to get out before a little dip occurs. So that's exactly why I would come into the screener, pick the next 8 weeks, minimum 10-year trading history. I want to cut out the little stocks. And by the way, I can come up here. I can hit save. And we'll call this, Candlestick Forum faves. And then every time I come back to this page, it'll always be here. All right, so what do we got? Let's bring this back up. Red Hat. I'm going to write these down to save us some time. But we got Red Hat. We have Akamai. We have Autodesk. ePay and VeriSign. We're going to start with those. I'll even bring Lennar in for the home builders. All right, cool. Let's go first to Red Hat. All right, so look at Red Hat. This thing literally gets shot out of a cannon right here at the beginning of November. Now, what I could do is I could go to the CBOE, and there's Earnings Whisper and all that good stuff out there. I just use the CBOE. I could type in Red Hat, and I notice they have earnings in about a month. That's good to know. So it's typically not one of those earnings gap moves, because if it's an earnings gap move, I typically don't like that. Or if I'm going to play it, it's going to be a small position. So between now and their earnings report, which is right around there, this thing might even go up 16%. What's the hit rate? Oh man, 64%. Now that's in 8 weeks, or wait, 13 weeks. Let's move this back to 8. 76% hit rate in the next 8 weeks. If I just want to hold this for 6 weeks, 58%. 4 weeks, 64%. It's double-digit move. So now I would go to a chart of Red Hat, and I'd say, oh, baby. Okay, maybe I talk funny to my stocks. But I'd say, oh, baby, please be in a tight range. Please, please, please be in a tight range. Because if you are, all I'm waiting for is the first break. And Steve teaches you guys technical analysis all the time. So what I'm looking now is, okay, pop like a buck, give me good volume, and we could be off to the races. I'm going to cut to the chase here and just say, this is still an okay pattern here. This was resistance. We went up. We've come back down. We back tested. High wave doji. We just saw the Qs, and we saw SMH not doing well. Red Hat's actually holding up. Now, one way I could do this is if the stock was about to break out, and let's say I wanted to establish a position, I'm going to show you what I do. You need to do what you do. I can't tell you what to do. I will typically go out about 45 days past, beyond the time I expect to hold the stock if I'm going to buy a directional long call. That's because of time decay. I really want to try to avoid getting hammered by theta decay. So even though I want to hold this till, let's say, the middle of December, that's sort of only 30, middle of January is 30 days past. This would be like bare bones minimum. I could consider something at the money. A 77.50 only costs $350 for a contract. And that's a fraction of buying the stock. So for me personally, if I was trading a 5 or a 10K account, I'd be okay spending one $350 purchase, playing something that historically has done very well, adding to the fact that, hey, it's breaking out of its range. The technical analysis looks good. Because you don't really want to just take stocks blindly just because the seasonality says they go up, right? This could be the one year they don't go up. So between what Steve teaches you, or what, heck, even I can teach you, Steve's awesome. He'll teach you candles. It's like, oh, you got to gap up. That's great. Rising window, right? Get above 70, get up to 79. You've taken out previous highs. Boom, trade on. And now you know you want to dump it by earnings, or definitely by the middle of, what do we say? Right there, it starts to pause, which is right around the earnings report. So I want to dump this literally in about 4 weeks. Okay. Let's go look at, because I also want to do, we're going to be doing 3 retailers, by the way. I'm going to show you something there as well. Oh, this is great. This is Akamai. Look at this thing. Looks like it gets really bullish now. And once we get into that time when the S&P starts to correct a little bit, the thing's just dead money, and then she drops. We actually go from as high as plus 15% to plus 8. That means there's actually on average a 7% less performance. So if I move this literally, what is that, 4 weeks? It goes up a lot, but look at the hit rate. 47%. Now if I go back to 8 weeks, then it goes to our 70% hit. I'm just not liking that one. Yeah, it goes up, but it also pulls back. I don't know. I think Red Hat looks even more interesting. Let's do Autodesk, ADSK. This is interesting. Nice bullish run. It plateaus in January. It's going to default to 13 weeks. What happens if we make this 8 weeks? Still 70% hit rate. So this thing's starting to look pretty strong, whether it's 8 weeks, 13 weeks. Goes up double digits in 22 out of, whoa. Now this is what gets my attention. 3 decades worth of data. 3 decades worth of data. it goes up 70% of the time. That's really hard to argue with, even if you don't believe that these cycles actually occur in the market. The data is the data, and if you're an engineer, you're just smiling ear to ear because, well, the data is the data, right? It's hard to argue with real data, not personal opinion. There's no personal opinion in this. So if I go to a chart of Autodesk, what's Autodesk doing right now? Ooh, she's on the verge. Oh, this is great. Look at these highs, right around 73. Today we closed above it. We got ourselves basically a high wave doji, big distribution bar. Okay, so I want to be a little careful. If I get a higher close, this is now a breakout, and we're in the positive time of the year for Autodesk. This one goes to the top of my list to potentially trade. And if I wanted to use calls instead of stock, ADSK, it's April or January. I guess I'd have to go to January. Otherwise, I'm going to be buying a tremendous amount of time. Something near the money, $430 a contract. And if this stock goes up, and what did we say? What did we say the 8-week average was? 12%. If it just sticks to the average, let's just say 10%, right? So 10% of 75 is what? 750. So if I take $75 and then subtract $7.50, that means the strike 67.50. We can say we're going to buy it for $30 and it's $35. It's a $400 contract profit potential on a $430 investment. It's almost a double, except we did not account for time decay. If we held this trade 10 days, we lose 30 cents. We hold it a month, we're going to lose $1. So you just can't go, oh, if it goes up 10%, I could count backwards in strike prices and say, what would it be worth? Actually, if we held it a month, it would probably be worth around, let's say, $7 a contract. And then you're still making $270. You're up over 50% without actually having to buy the stock, as an example. All right. Let me just quickly type in these others. If there's nothing different, I want to show you something else now. VeriSign. Let's do like 8. Well, we already know 8 weeks. VeriSign has a 72% hit rate. Let me do Lennar. Oh, yay. Look at this. This is huge, gang. Lennar has risen higher by an average of 15% in 24 of 29 years. We nearly have 3 decades worth of data. 82% hit rate. What happens if I drop this back to like 8 weeks? 79%, 10 weeks, 82%. So this thing is just sweet right now. If we go to a chart of Lennar, oh, perfect. You might be thinking, why did I just say perfect? Do you think anybody in their right mind is paying attention to this stock right now? I mean, maybe you guys with Steve, because it's starting to look like a potential bottom here. You have a big opposing candlesticks already about 2 weeks ago. But no one's watching this stock. Everybody's looking for the Goldman Sachs's that are going up, 15% in 2 days. And then here's little old Lennar. So if this thing starts closing over $42 and volume is good, we already know what the seasonal projections are. This is going to catch people by surprise. And then when it's up here, they're going to say, hey, look, Lennar's up 10%. And we could say, yeah, we already knew that because we had access to a software that told us that. It could potentially happen. All right. Now here's what I want to do next. Are you guys okay with the speed that I'm going? I'm trying to talk fast, but not just hopefully blow everybody away. I want to speak to retail stocks. And some of the most common retail stocks that I get asked about are Kohl's, Nordstrom's, Tiffany's, Coach. Does anybody else have a retailer they want to look at? We'll do 5 of them. We can knock this out in about 5 minutes. And by the way, Becky is going to be awesome. She's going to be giving you guys a link. And Becky, you could even drop it in now if you wanted to. We'll do Target and we'll do Home Depot. Perfect. But what we wanted to do for you guys, because Steve was so kind and left us come to you guys months ago as beta testers, we're doing a 14-day trial, no credit card required. would everybody please take me up on this? I can never charge you if I wanted to. Please play around with it. Send us your comments. There's nothing to cancel because we can never bill you. You're going to get 14 days on the house, full access to everything you see, and it's never going to cost you a dime. So you can start playing with it right now into the holiday season. So here's what we're going to do. We're all sitting around the table, and we're talking about retail stocks. Hey, who's going to move the biggest with Thanksgiving coming, Black Friday, Christmas, Hanukkah? The market's up, new president, everybody's happy. Well, maybe not, but you get the point, right? Everybody's happy about the market. So let's go type these guys in. Let's start with Kohl's. Low-cost retailer as opposed to a Nordstrom's. And we're going to go out we're going to make it 10 weeks. Does Kohl's go anywhere over the next 10 weeks, gang? That dotted line looks like it goes nowhere. So Kohl's has risen higher by a whopping 0.1%, and it only does that half the time. I have a question. Does this look like a stock that's going to rip the doors off and go higher into the end of the year? I'd say no. It doesn't even go up 1%. It goes up 0.1% on average. Well, I guess I'm not trading Kohl's. How about Nordstrom's? Higher end retailer, right? Opposite end of the spectrum. Move that back to 10 weeks. Okay, it looks like it gets a little bit of a move on, and then it dips right before Christmas, and then back up. So let's see. So over the next 10 weeks, Nordstrom's does what? Goes up like 3%. That's pretty good. 18 out of 30 years. That's just more than half. Man, that's only 60% of the time. Gosh, that's not looking the best either. Okay, let's stick with high-end retailers. Let's try Tiffany's, right? Ooh, this is interesting. Tiffany's actually dips, but then it goes up and then it actually falls off. So over the next, and that's 13 weeks, let's do 10 weeks. 37% of the time. So if I'm just looking for seasonality, it's not necessarily the best. But what was really interesting is when it was out to 13 weeks, can you now see the time you don't potentially want to earn Tiffany's? Look at the new year. It goes from plus 2.39 minus 1.51. That is almost a 4% swing. That's like the no-no time to own Tiffany's, historically speaking. Maybe this year it goes up 1,000%. But wow, using 29 years of data, it ain't looking good for Tiffany's. So I don't want to own it at that time. How about Coach? Handbags. That's actually 13 weeks. That actually looks really nice. Oh, check Coach out. It goes up on average 8% in 12 out of 16 years, 75% hit rate. Okay, of the 4 stocks that I just showed you, this one is standing head and shoulders above all the rest. Coach is clearly the winner here based on historical data. And 16 years is not that bad, right? Of a time frame. Now, we had Target. What's Target doing? Lower cost retailer, right? Like a Walmart. I'll leave it at 13 weeks. 50% hit rate. Gosh, I could try to play with this slider, and it just doesn't get any better. It doesn't get any better, gang. Target doesn't do that well. You have a 50-50 crapshoot, and it only goes up 4%. I mean, heck, if you walked into the casino in Vegas and you picked even or odd, you pretty much have a 50-50 bet with doubling your money. This just, to me, just isn't that. It's not good enough to want to trade. Now, maybe if Target was giving me a fantastic candlestick pattern or a trading range and it was about to break out, those are all, what ifs. But just looking for a retailer to trade, this one's not it. How about the Home Depot? Whoa, check that out. That's got some oomph on it. So using for the next 13 weeks, 8.6% rise, 24 out of 32 years. Out of 3 decades, it's got a 75% hit rate. When you start accounting for market collapses, 08, 09, 2000, stuff like that, all of a sudden it could potentially be accurate in not 24 of 32 years, 27 or 28 out of 32 years, which then becomes incredibly powerful information. And you can start saying, wait, are you telling me that unless the market crashes, this thing is almost a lock to go up? Well, nothing's guaranteed, but boy, the data sure could support something like that, right? That at least that thought. What does Lowe's do? I am curious. Not quite as good as Home Depot, but still very, very well. All right, let me just see if there was any other retailers. I think I hit all your retailers. So to me, one of the winners is Coach. Let's go ahead and type in Coach and Home Depot. So here's Coach. Does Coach look overly attractive right now? It's like, well, this is going back to April now. Not really. That's the point. No one's paying attention to this stock. But all of a sudden, yesterday we had a big volume day, closed near the highs of the day. We got above an institutional moving average, which is the 50-day SMA, and today there was a little bit of follow through. But we also came back way off the highs. In my humble opinion, this is my belief, if we can have Coach close above $37 on at least average or above average volume, that's going to take out these highs from October. It would then get us a close above the open from the earnings. The next day's rise was 37, and then we would get above today's, close. I think 37 bucks is a big deal for Coach. OBV, which I refer to as the institutional volume indicator, it's coming up too. So we're starting to see good signs here that maybe Coach is going to begin its run. Home Depot? Yeah, darn it, election. I remember talking about this in a webinar for some folks, and we were looking at Home Depot, and I said, I do not want to touch, and by the way, when I say I was looking at Home Depot, it was back in here. I said, listen, Home Depot's bearish. I don't want to touch it, but all we want to wait and do is look for volume to come back in, and then it had the election, right? Well, look what happened. This thing just got shot out of a cannon, and look where it stopped. It stopped right at 130, which were these previous highs. So on a closing basis above 130, it's still going to be in its positive window from a seasonality perspective. But we already did have a big rally. So this was shaking people out. Oh, magically the stock goes up. Gee, why? Well, I'll tell you why. Because history says it's exactly what it does. So it's really interesting stuff. I have a lot of fun with it. There's some other really great information in here, gang. You guys are going to get the all access platinum pass. If you actually tried to buy the pass to everything that you saw today, plus about 15 more things that we have on the site, it's 159 bucks a month. You guys get it for nothing for 14 days. And then if you decide to actually buy it after day 14, you only pay $69 a month, not 159. And that's the Steve special. So again, there's no cost to do this. When you use the link that Becky and Steve have been kind enough to put in, you're going to be taken to this page. All you do is you enter your first name, not even your last, your email, and say, yes, I agree. Type in your signature. There's no credit card. I cannot charge you. No one at Financial can, even if we wanted to. So it's a completely free trial. You guys can play with it. Let us know what you think. You'll be able to email us with any questions. We'll get back to you. If there's things you'd like to see added, please let us know that as well. We would love to have your feedback. Lists is really cool. I'm sorry. Actually, List is really cool. These are the stocks that we know have great fundamentals based on public data, meaning we use some of the same metrics that Buffett uses, which are public, and we use methods that hedge funds use that we are aware of as well. We put them all into a formula, and only the stocks that meet that criteria are listed. AMBA, Google, Monster, NetEase, they've been up there for a while. Long-term stocks, not something you're buying today and flipping tomorrow. But here's something cool too. If you guys go to newsletters, click on seasonality, you can actually log in every day and get a new group of stocks that historically tend to trend. Like here's Monsanto. Over the next 4 weeks, 87% of the time it goes up by about 6%. So if you guys don't even want to look for it and you just want stuff on a silver platter to go look at, you're going to have 3, 4 every single day. And there's also an Income Plus newsletter that is for covered call ideas. And you can log in every day to get these guys too. So you get that as part of your membership. What else? I mean, screen. You can go to the economy, then even get more. There's the Fed balance sheet. Typically what happens, now again, we're in an election year, so this is interesting because it's a fundamental event. But when we look at the S&P and Fed balance sheet, when we start getting stretched and we start getting readings greater than 150, okay, which we're up at about 1.2 right now, but anything above 150, the market typically pulls back, and we start getting readings down near 70. Wait a minute, we're not there. Hang on, I was going to say, wait, that's not 150. Here it is. It's like, where's my dip? So we start getting up here near 150, and it's 2.2, right? Come down to the histogram. We made this easier. Now you see this reading? Above 150 is overbought. Anything down near minus 100 is oversold. Longer term trading, not short term trading, but you can use this as well. We tried to make it super simple, whether you want a line graph or a histogram. That's in there too. All kinds of crazy good stuff, whether you're just a stock investor looking for long-term opportunity or if you want to do some swing trading. So if you guys have any questions, please do ask. I really appreciate you guys being here. Becky and Steve have put in the special offer. We do not know how long we're going to keep doing this 14-day trial and no credit card. We wanted to come back to Steve before the end of the year and make sure you guys get a chance for it. 14 days, no credit card required. This is the page you're going to go to. I'm dead serious. We can't charge you if you even wanted to. Play with it 14 days. As you get to the end of your trial, you're going to be sent a special link that says, hey, we hope you love us. If you love us and you want to stay with us, go ahead. Here's your special offer of only $69 a month, and you're grandfathered in for life. You'll never, ever see that over that $150 a month price. Do you guys have any questions for me? It's the top of the hour. If not, we're going to be looking to wrap up here pretty shortly. I hope you found this interesting and informative. I think it's a great time to do it, especially now as we get into the fourth quarter. We found a few stocks that are in patterns like Coach, for example, was looking interesting. I think we saw Autodesk as well. All right. Hey, Jason, you are welcome. All right, anybody else? Any questions at all? Did you want to see anything else on the site? Are you good? Use the link. Grab your free trial. Absolutely free. We would love to have a chance to earn your business, but we really want your feedback. So go ahead and play with it. Hey there, Bob. Is there an annual plan? That is a great question. Bob, we do have an annual plan, but there's nothing listed on the site. What it is buy 10 months, get 2 free. So Bob, if you go through your 14 free days and you say, man, I love this, we actually have an annual plan for $690. All you do is email us, ask us for it, and then we'll take care of you. But because the $69 is a discounted rate, when we first did it, there was no annual deal, but we are doing one privately, $690. All right. Rosemary, this was great. Well, thank you so much. Joy, what is your pick? Well, Joy, the one that I am watching very intently is Coach. I'm watching Coach to get over 37 specifically, and I want to see it break out. Close above 37, good volume, and then I could consider that as a potential long candidate. As a trailing stop, just like Steve, I like the 8-day EMA. So it is there. And by the way, when you guys check this out, we're going to go search. I'm going to go back here to seasonality. We're going to type in coach. You'll be able to see the seasonality, okay? But wait a minute. Go stock score. There it is. There. The 8-day EMA. We originally had the 5-day EMA in here, and then after we had our first session with Steve months ago, when we were doing the beta test, you guys wanted the 8-day, so we put the 8-day in. So we have an 8-day EMA and an 8-day SMA. But that would be my trailing stop. Alrighty, what else do we got here? Hey there, Peter. You are very welcome. Thomas, you are very welcome. Joel, you too. Paul, you betcha. Don, is there a tutorial on how to get the most out of your site? You betcha. There is. And what you do, when you first go to sign up for the trial, there'll be a super duper simple intro video, okay? But when you're actually inside the site and you click on, let's say, screen, you see how there's a, right up next to pricing, it says how screen works. There's going to be a video for these different areas, how lists works, how newsletters works. But what I've done is over the course of your 14-day trial, I've recorded 6 different how-to videos, Don, that are anywhere from 30 to 90 seconds long. So they're very short and very on point. So not only can you go up, Don, on the website and find, how things work, in those emails, please open the emails. There's a link in there, and it's going to be a super fast video that gets straight to the point. So Don, I would really appreciate if you do the trial, if you let me know what those videos, how helpful they are to you. Recording of this video, Jason, Becky is recording this. She's being awesome, so they'll have the recording for you. RC, gotcha. Hey there, Charlie. I don't know how to trade options. Can I swing trade? Okay, so you're talking about stock. So you came in late, Charlie. I had a disclaimer at the beginning. I'm not a licensed financial advisor. Don't ever want to be one, so I can't tell you what to do. How I can use this for me is I can trade just stock. I don't have to buy options, and I can still follow along with seasonality. I can still follow along with stock score. It requires more capital, right? But if I understand options, I could then also, in terms of what's the minimum account size, if we're trading stock, I don't know how many shares is enough of a particular security for you. Maybe 10 shares is enough, maybe 200 are enough. But also, then it requires typically more money if you try to really be diversified. Putting half of, let's say, my account in one stock, whether it has a great seasonal track record or not, could be disastrous if the stock were to gap down, having a accounting irregularity, things like that. So you have to answer that one on your own. In terms of options trading, I try to keep it, 3 to 5% of the capital on a per trade basis. That's just what I find that works for me. Sometimes I'll go over that, but I want to be very, very careful. RC, does this work for relatively new and younger companies? Really interesting question, RC. RC, the more data that we can get on a stock, the more accurate that data could potentially be. Because if we have a stock that goes up 80% of the time, and it has 30 years of data to provide us, well, that's incredible amount of data set, right? But if the company's only public for 4 years, and let's say it has a 100% track record, well then, what has the stock done for the last 4? What has the stock market done for the last 4 years? It's gone straight up, right? That's the point where even a blind squirrel finds a nut once in a while. So the more data that we can get, I feel much more comfortable considering that stock over a stock like Alibaba that might have, or Facebook that might have just come public. We just don't have enough data to make it as reliable. The analogy I used earlier, to use a baseball game, and let's use football. Let's use a place kicker or field goal kicker. So we own a football team, and we're going to and our field goal kicker got hurt. So we're out there looking for new field goal kickers. And we find out this guy, this field goal kicker, has a 100% accuracy record, and the next guy only has an 80% accuracy record. Everybody would take the 100% until you found out he only made one kick, and he made it. Well, heck, I could do that. I'd rather take the 80% guy because he's been around for 15 years, and he's also played in 3 Super Bowls. You know what I mean? It's the pedigree that can really help make a difference for me. I hope that was a good analogy. MK, what if you do not trade but would like to? What would you do? Well, the first thing is grab a paper trading account. You should be able to get one at Thinkorswim, TradeStation, Options Express, wherever. Grab one and trade the heck out of stuff there so you don't lose any real capital. Steve has great education on his site. We have education on our site too. Steve is a candlestick master. You really can't learn from anybody better. He's the man. So one of the first things I would do is try to understand what options are and understand candlesticks. Like 2 first things I'd want to do. Because as a trader, I don't like to trade stocks unless they're optionable because I can't effectively hedge the risk the way I like to trade. So learn candlesticks and learn options. Those are the first 2 places I would look to start. JJ, can you use this for day trading? JJ, my opinion is no. Because this is all built on swing trading. Buying it today, holding it 1 week, 2 week, 3 week, 4 week, or longer at a time. So no, not day trading. Because even the stock score that I have on your screen, that's fundamentally based, and fundamentals aren't made to day trade. They're made to swing trade or long-term trade. Well, guys, as usual, Steve's group always has great questions. No difference this night either. When you guys ask questions, you make my life easy. So I don't want to keep anybody here longer. If there's no other questions, we can look to wrap it up. This is the link for that 14-day trial. It is a 14-day trial, no credit card required. It's the best deal you're ever going to get. Peter, I don't trade options. Is stock trading okay? In my opinion, it can be. It's stock or option, or both. If stocks are moving on average, and again, there's no guarantee it's going to happen again, but history has shown us this is roughly what it does. If stocks start moving 5 and 10% over 8-week periods, in my humble opinion, that works for stock trading. If a stock's at $50 and it's going to go up $5 in the next 8 weeks, that's a $5 a share return. If history proves to be correct again. Mutar, thank you so much for coming. Richard, thank you. RC, much less stressful, you bet. I mean, what I think one of the best things about it is, it's like when you're in session with Steve, and Steve finds 3 awesome trades, setups. And he's like, boom, boom, boom. Based on education, these 3 look great. And then you say, okay, well, I only have enough money to trade 1. Well, you could come over to financial, use the seasonality tool, and go type in ABC and say, holy crap, stock C actually goes up the most. That's the one I might want to trade. So it can actually be a tiebreaker for you, which can be hugely powerful, using seasonality or even the stock score. Hey there, Don. How do you get your 6 videos? Hey, Don, we made it really easy. When you sign up for that 14-day trial, they're actually going to be inside the emails that we're going to send you. So you're going to get an email tonight with your login credentials. And then over the course of the next 14 days, you're going to get a bunch more. And in each email, there's going to be a 30 to 90 second video. Plus, on the website, all you have to do is just go up here and click on it and it says how screen works, and you'll get those videos too. So they're really straightforward. Option trader, can this help with earnings trades? It depends what you're trying to do. If you're looking for volatility trades with earnings, no. If you're saying if you want to have the earnings be part of the seasonality, yes, because the earnings, if a stock typically has a great third or fourth quarter report, and that's typically when the stock trends very positively, it might be the earnings report that's the catalyst for that continual historical accuracy. So in that sense, yes, but we're not going to be data mining for specific earnings trades, no. Hey, Don Mack, you're very welcome. All right, gang, any last questions? If not, we're going to wrap this up. Wish you guys a fantastic week. Happy Veterans Day tomorrow. Happy Gobble Gobble. Thanksgiving's only about 2 weeks away now. And we are in Q4, which is a seasonally positive time of year. I think there's no better time to try this out than now as a result. See which stocks tend to do the best right now. You have the wind at your back. Now we can be laser focused and try to pick out the best ones. Hey, Don, thank you. All right, gang, one last time, here is your link. I would like to say thank you to Becky and Steve for inviting me in and being here. And wish you guys all the best. If you have any questions, the email address is care@financial.com. When you sign up for your 14-day no credit card required trial, you can reply to any one of those emails, and that'll send your comments right back to the team, and they'll get right back to you. So thanks again for coming. I appreciate your valuable time. Thanks to Steve and Becky, and I wish you guys all the very best. Moto and Don, thank you. Carolyn, thank you so much. JJ, thank you. Okay, have a wonderful night, gang. We'll see you next time. Bye-bye.